Hey everybody, welcome back to Ryan Makes Sense. Today we're going to be talking about ticker symbol SYM. This is a viewer requested video. The company is called Symbotic. So we're looking at Symbotic and we're going to see if the stock deserves to be at $27, $28, should it be worth more or less. We'll run our proprietary calculation. Ooh, we'll also go ahead and do some advanced charting on Thinkorswim to see if we can find any potential patterns, resistances, supports, etc. It looks like the stock went from $3 to $64, which is absolutely incredible. I'm also seeing a potential area of support that the stock could come to. So without further ado, let's go ahead and jump on in. So this is Symbotic. This is a special industry machinery stock. Our preferred indicators are the RSI, MACD, money flow, and relative momentum indicator. So for example, what we are seeing here is a potential reversal in the momentum. Okay, fair. Our strength here is about 48, which is neutral. So it's not really with the bears or the bulls at the moment. However, the stock really within the last 3 months went from $17 to $40, and now it's back down to $27.95. Money flow, we can see it kind of accumulated right here where the bottom was. Again, you can see it right here, and then it went up, and now it's kind of heading back down. Could this be a little notch before going back up? We'll find out. Let's go ahead and load our institution and hedge fund data real time. And our relative momentum indicator, it actually looks like it is consolidating at the moment. So it's kind of important to consider. You see this downtrend here, like right here on this tick especially, it's going down. And also looking at this same candle, because you can look at both interchangeably. You can see my candle here, or you can look down at this momentum indicator. The momentum indicator continued to go down while the stock jumped over 200, well, over 100%, and then retraced about 35%. And the relative momentum indicator is still going down. So what this really tells me, because all of this data here, the strength, momentum, the money flow, it really just looks like there is more potential for a pullback. And I'll show you what I'm talking about. So this candle right here is kind of our main indicator. When you see a candle, a Japanese candlestick like this with a huge upper wick like that, it is very bearish, meaning there is likely negative stock price action to follow, typically. So you can see there was a lot of demand to sell here. People wanted to sell so much right here. And it kind of looks like it was a quick trade for a lot of people. They accumulated right here on the bottom, paid off for them, and then they sold out. And you can see this huge red candle right here. This is the most volume ever that this company ever had. It was 66 million shares traded in the month of November. So pretty telling here. I think this is going to continue to go down, but we'll go ahead and see what the data shows us. So overall, I'll give you guys a second to digest this. And there's so many ways to interpret this. If you are lazy, or you just, not lazy, if you just want to rely on FinViz giving you a picture, you could always look at this recommend column right here, the row, sorry. So this recommend is 2.20. 1 is the absolute best, 5 is the absolute worst. So it's a little bit below, it's a little bit above average in terms of a buy. So 2.5 is going to be middle, probably like a hold. So this is a little bit less than a hold, which maybe it's more on the buy side, but our forward PE is a 51, meaning if we have the same data this year, 90% EPS, 1.7 billion in sales, not profitable, Um, 14% gross margins. That's interesting. Basically, if they have the same data next year, this stock will be still overvalued. And we can see that they are guiding for 109%. So it's about 19% more than they did this year, which is fantastic. However, things change, and we're going to see a new president coming in. So keep that in the back of your mind. EPS over the past 5 years is extremely negative. However, sales over the past 5 years is positive. So it does show resiliency through the COVID pandemic. A lot of people are shorting this at the moment. So yeah, overall, a very low debt, very good here, very low debt. Their quick ratio is the 1.2. So if they close their doors tomorrow, they would be able to pay off any debts, notes, loans, etc. So that's good to see. It's comforting for sure. They are not profitable, but this is something we could look into because maybe they are right on the cusp of profitability, which would be huge for this company. And it is usually pretty big for a lot of companies. And then you can see the growth here has just been outstanding. 2024, 1.79 billion. I guess they rounded 1.8 billion. 2023, 1 year before, was about 62 million, $620 million less. So that's a huge jump. And then 2 years before that, it was $1.2 billion less, which is huge. So this company's had some major growth, potential acquisitions. We'll probably get some type of indicator of why there was such a huge jump. Shares outstanding, not horrible. Over the last 4 years, they've only added 3.6 million shares to the float. But again, that's not even considered significant at all. So this is a green flag, green flag. EPS looks like it's reversing, so also a green flag. So a lot of good, positive things to see here, but let's run it through our trusty calculator here. So the company has 16,450 million in market cap, which is fantastic. Income is, so the negative, not profitable, 11,330,000. It sounds like that's pennies to them basically because they bring in 1.8 billion a year in sales. So 1,800 million in sales. Yes, okay. And then again, very low debt and good cash position. So I'm thinking this is going to look really ideal. We'll go ahead and analyze a little bit more down here. So total revenue this year, Q3, 576 million, but they spent 468. Gross profit, 108. Almost 100% gross profit year over year, which is huge. That's awesome. Net income, profitable. Again, I think they're going to become profitable potentially 2025. It really depends. Like, look here, they were almost, let's say, call this 5. And the last year, at the same time, they were negative 6.2. So huge net income growth there. To go from -6 to +5, basically, that's insane. EPS recurring, no change there. Yep. Gross margin. Gross margins also went up year over year, 3.8%, which is huge. So this company is looking really good. Okay, and let's go to our balance sheet. All right, they have 728 million in cash. What was exact? 728, 108,000. Okay, and then debt, 16 million. That's nothing. 16 million, 80,000. All right. And let's just do some analysis. Total assets 1.5 billion, total liabilities 1.18 billion. No concerns there at all whatsoever. Assets increased about 78.5 million, while liabilities increased about 35 million. So that's an amazing recipe for success because if you've seen a lot of my videos or you review a lot on your own, typically when assets go up, liabilities usually, I would say 69% of the time, I don't know why 69%, 69% of the time when assets go up, liabilities go up as well, but liabilities usually climb higher. So this company seems like they figured out their secret sauce and they might be trying to figure it out. So like right here, for example, Q1 2024, they had 1.552 billion in assets. Liabilities, they had 1.159. And then from Q1 to Q2, they lost 52 million in assets while they only lost 6 million liabilities. So they took a huge hit in assets while liabilities barely went down. So from Q2 this year to Q3, it looks like they kind of figured it out where they can increase assets and to where they can increase assets but not increase liabilities, at least for now. So this looks really, really good down here. This is showing maturity for sure. And then their quick ratio, and look at this, their quick ratio back in 2023, Q3 and Q4, 0.8 and 0.98, while this year quick ratio is 1.23. So they have gotten healthier, they've matured. A lot of selling. Lot of selling. I don't see the CEO selling, which is good. The CEO is Richard Cohen. So it's good that I don't see him selling. However, everyone else here selling is kind of, it is what it is. It's not really a red flag, but typically when a stock is overvalued, people sell. When it's undervalued, insiders buy. I don't think we've gotten to the point where the stock is undervalued at the moment. I think what's going to need to happen, and I'm just going to jump back all the way up really quick. What's going to need to happen is we're going to see the stock come down probably to 20 bucks. And by that time, I think all the insiders should be aware that the company has killed it. And what I mean by that is look at 2020. They weren't even not making any money in 2020 or 2021. And look at the stock price. I guess the stock was so far. 2023. The stock was doing 1.18 billion and the stock got all the way as high as $64. And the company has improved greatly since then, sorry. The company has improved pretty greatly in terms of gross margins, the quick ratio, cash is whatever. Rep sales are killing it. Profitability, that's what we're going to look at. Profitability looks like they're going to be profitable 2025 or 2026. They're on the cusp of getting into an exchange, honestly, like the Russell, or they're looking honestly really good. So let's get back to this. Shares outstanding is going to be 104,690,000. And that brings our stock price to $181. Did I mess something up? 104 million. I don't think I messed anything up. Market cap billion, negative 11 million, 1.8 billion. That's good. Cash was millions, debt was millions. 104,690,000. Yeah. So I'm getting $181 stock price here, which is freaking amazing. There's one other stock that gives me a similar calculation. I'll leave this up to you guys to do. I'll probably do it early 2024 because I love this stock and it's made me so much money. And I'll review it at the end of this year. But Carrot Packaging, literally, the stock price was like 18 bucks and I was getting a $70 price target. It's like, what? So this is absolutely beautiful because gross margins are improving. That's good. Gross profit is improving. Sales are continuing to jump up. Profitability looks like it's going to happen. Earnings per share is really turning the corner here. Yeah, I really, really like this. So, although we're seeing some amazing data in terms of the stock price, If what I'm seeing is a decent estimation of the stock price, we should see insiders, not insiders, institutions and hedge funds, um, mom and pop shops, retirement funds should be all over this, right? So if they have some type of analyst that does perform similar modeling, old data shows they own 37%. When I say they, big money, old data is 37.31%. New data 86.9. I have never ever. That's a 50. We got goosebumps. That's a 50. No, it's not 50. 37 to 86 is 49. 49%. 49.6%. Yo. 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 Wow. Wow. I'm speechless. A lot of people bought in. So a lot of people, so the Cohens, I think Richard Cohen was the CEO. He sold 1.8% of his shares, which is nothing. That's like less than 4 million shares. Good for him. Walmart owns a significant stake here, and they added shares end of last year. So they added, where to go? They added at $50, between 50 and 39. Let's call it 45, 44. Wow. And then Bally Gifford purchased 10 million shares at May of this year. May. Bally Gifford between 38 and $48. So maybe $42 a share. Now we're at $28. I think I think my mind has changed about this stock. I'll show you what we're gonna talk through this, and we've got an amazing, I've got goosebumps still. We've got an amazing business case for this where literally all the right things are improving: gross margins, revenue, profitability, EPS, debt decreasing, gross margin. Yeah, I mean, we've got an amazing business case. Now what needs to happen is the chart needs to also align. Um, so that's two parts, and then the third part is arbitrage. Arbitrage, and what I mean by that is big money. Big money has been loading into this. They own 86% of the float at this time. And there's 39 million shares float right now, and it's being shorted about over 30%. So literally 20 million shares are available to the public at this moment. So let me just tell you, shares float. Definition of shares float. So that's basically what is available to the public. Just want to confirm so everybody's on the same market or same page. A stock float is number of shares of a company that are available for public investors to buy and sell. So, so, so you're telling me there's 20 million shares available at this moment because people are shorting the heck out of this, which is fine. This candle is obviously like a go ahead, short me to the ground. But at the same time, 49%, there's been a 49% change in institutional ownership to the buy side. So it looks like a false flag where it's, oh my God, people are shorting it, but it's also like, holy cow, insiders are loaded to the gills. So we've got an amazing business case. We got insiders buying so much, it's not even on the radar. Wow. Okay, let's go to the charts. All right, now we're doing the fun part. 20 minutes in, apologies. Okay, beautiful. So this is gonna be our buy, buy. I don't even know if it'll get this low, but this is our. If you would have bought at any point in time in this zone, you would have made over 1,000 to 500%, maybe 300%. So, is it going to get there? I honestly don't think so. Okay, this area, I'm just gonna, shit, whoops. This area right in here, the stock has never been able to break this secondary line that I was just tapping. Stock has never broken above this. So we're gonna get into an excellent area of arbitrage. We're already like seeing major arbitrage, but like technically, technically, right in here. I'm gonna remove that because that's ugly. So we got that, but this is what I'm actually excited for right here. This is what I'm excited for. Oops. Okay. So we're trading. There's so many things going on here. I love this. Let's keep going really quick. Sorry. This is absolutely gorgeous, and I'm going to break it down for you. Let me move my head. So we went from the cycle low, which was right here, to our cycle high on the Fibonacci arcs, and we can see how well the Fibonacci arcs react to the candles is essentially going to give us confidence in this Fibonacci pattern. So again, cycle low here to cycle high. Looking at our outer ring here going up, so we can see we've got an amazing test of support here. The stock obviously bounces. This candle right here also kisses our inner ring. This candle right here essentially confirms this whole existence of this Fibonacci arc, which is absolutely beautiful. And right now what we're seeing is the stock cannot break it. It tested it once. This tested all the way into our inner ring. It failed, retracted. This candle right here tested and failed. So I think we might have an area to accumulate this at a potential gorgeous price. We could see the stock come back down to this blue line right here, which would probably be like $18 to $21 over the next 6 months. However, if we continue to see major buying, it has a lot of resistance back into this Fibonacci pattern. So the reason I created this Fibonacci pattern is because we went from our cycle low to our cycle high, and it's definitely confirmed. This right here is all we need to see, this candle right here that I'm highlighting, this red one. It perfectly kisses right here, perfectly kisses here. Whoever is manipulating the stock, just, you're doing a great job. I mean, how else do you just perfectly, yeah. So this is confirmed by all means. Now we want to go from our cycle high to our cycle low, and we want to see a similar level of confidence of the candles reacting to this art. So I'm going to go from our cycle high of 64.14. So this could be potentially our cycle low right here. Do I want to say this is it? Maybe. Because what we could see happen, and I'll make this a different color. Okay. What we could see happen is this will probably trade sideways. We've got some big resistance here. It'll go through here. Then we've got this red, this upper red. The stock has never broken above this red. So I think once we do break this red right here, we could really be off to the races. However, we do have these Fibonacci arc resistances all the way to, excuse me, all the way to 2029. I mean, but with the amount of buying we're seeing, this could be absolutely insane. And the company's obviously on the right track. I was getting a $181 price target. So to me, honestly, this is something I really don't mind taking some bites into. Maybe buying one share every month or 2 weeks if it's my Robinhood trading account. Really just dollar cost averaging. I mean, the company's doing good. They're improving. We've got insane insider buys. This is just gorgeous. So yeah, I would not mind buying 27. I wouldn't mind buying at 20. If it could get back down here, 16, 18, that would be also ideal. As long as the company continues to improve. Again, we love when good companies go on sale. Do I think this is on sale? Maybe. We had, the stock went down to 17 bucks and went to 40. And look how this candle perfectly tests this Fibonacci arc right here, the new one that we just created. Like, come on. This is just amazing. This is just amazing. So I think dollar cost averaging into this would be sweet over the next. I would probably start end of December, see where we're going with the buy side volume. Obviously, we want to exceed or be close to 66 million shares traded. So if we can get to like 60 plus, that would be great. If we can exceed 66 million, that would also be great. Yeah. So, yep. My low side targets for this again are going to be 18, potentially 17 to 13 low if the stock really takes a beating. Again, the stock is really turning around, in my opinion. Insiders are loading the freaking boat, so I like this one a lot. You can definitely wait on the sidelines. We want to see how this candle plays out. It really looks like there is a lot of demand, but we also need to consider the larger pattern. So we went all-time high, dip, lower high, lower low, lower high. So we want to kind of let this cycle play out. Again, if you've got time in the market, see how December goes. Maybe there's probably a pretty good chance it tries to break 31 again. Again, if we break this red line right here, the second one that I'm tapping on, we could see some face melting. So, and there's also 32% of the stock being shorted. Again, could that be a front for insiders to load down here? It kind of seems like it, honestly. So anyway, talked a lot about this. We're about 30 minutes in. That's all I've got for you guys. You know how I feel about it. If you made it this far, consider subscribing, leaving a comment, or liking. It lets YouTube know that there's engagement. Maybe they should show my stuff to other people, or maybe just keep myself on the low to only a small audience. So thank you for watching. Take care. Adios.